So we're here to talk about Ora Banda, which is a really good story, and it's about to get even better. Before we talk about the going forward, just want to cap on what a year it's been, and this is really just a testament to the work that the Ora Banda team, our business partners, have done. But last year we we were a year into changing strategy from looking at open pits to underground, and where are we along that journey? Well, last year, FY23, was a year of fixing. We did 48,000 ounces for the year. We started to see the benefit of that fixing. So you can see that chart going up quarter on quarter of continuous growth, culminating in a record quarter in June, which is 46% higher for a record year at nearly 70,000 ounces. So you're talking nearly 50% jump in ounces year on year. And the awesome thing about that is it's only just starting to move into the underground stage of delivery, so we've got plenty more to come. But you can kind of look through all of those achievements. It's not just one area of the business. Every area of the business, both from sort of operational, corporately, was fixed, strengthened, and team enhanced, and the culture's really getting embedded as a can-do culture, and really excited about going forward. When we talk about corporately, we're getting stronger and stronger every quarter. So we've got a great board. Just recently had the addition of Catherine Cutler for the geologist. So we've got our disciplines covered, really good dynamic. And it's a board that can unlock the belt and grow the company, which is very exciting. Management also, disciplines covered, really good culture. Want to be there to just, to drive this company to the next level, to the mid-tier that we want to create. And then the capital structure, so market cap sits between 700 and 800 million in any given day these days, but really balance sheet has never been stronger. We chipped down debt from 11 to 4 million last quarter, cash on hand, nearly $27 million, and then, moving to strong cash flows. So balance sheet strong, corporately strong, disciplines covered, but also our shareholders have been fantastically supportive over the last couple of years. Some have jumped on early, but really the change in strategy is delivering dividends. And there's a shareholder base that wants to see this management team unlock the belt, and that's what we're really excited to do. So when you look at the belt that we've got, I'll always talk about just the outstanding prospectivity. So forever and a day, when you look at the history, we've got that centralised mill at Davyhurst there, and then you've got 100 kilometres of strike. And this has got two regional deep tapping structures. The Ida Fault is a Zuleika Shear, known to host high-grade gold mineralisation that's never ever had systematic and sustained exploration effort at depth. So when you think back 2 years ago, it was a hub and spoke open pit model, filling a small mill with low grade. Strategically, it was never going to work. So the best it was ever going to look like was about 70,000 ounces. Pivoting to filling that mill with high grade was basically just go from the 48,000 ounces towards the 150,000 ounces. So importantly, to do that, you're still hauling and processing the same amount of dirt. Basically, you're just getting a hell of a lot of bang for buck. And how are we looking sort of 2 years from changing strategy? So 2 years ago, we had 20 mil in the bank. We were losing about 4 mil a month on the open pit strategy. We had no undergrounds. And on a small budget of 25 million over the last 2 years, we've found one underground at Riverina, which is that northern end of the belt, and we've got that to commercial production. We've found a second underground, and we're going to cut the portal in September. So from a cold start 2 years ago, one underground commercial production starting the second, it just points to the outstanding prospectivity of the belt. And there's a couple of slides later that really show that. But we can't have found the only two or the best two mines with a 25 mil exploration. So when we talk about the exploration potential, this is what we talk about at the belt. And by the numbers, what we're really looking at is getting the business right-sized. So I spoke about sort of going from the 48 to the 70. This year is going to be 100,000 ounces, and that's really driven by the underground kicking in. So that gold chart there, you can see FY24 didn't have much support from Riverina. It was just getting ramped up. Next year, it's hitting steady state, and then we're bringing on Sand King, which is the lighter gold on top. But then for the first time ever, you've got a really strong balance sheet. You've got a really strong production profile. You've got really strong capability of the team. And that is actually the starting point. So all the stuff we've been doing, it's not to actually get to 150. 150 for us is the starting point, because then suddenly we've got all this capability to further unlock the belt. And when I show you these exploration slides a little bit later, you'll get a feel for that. But this year, FY25, getting 100,000 ounces, it's really just to set up for FY26, that 150,000 ounce run rate, where we see the cost drop to 1,800, ridiculous free cash flow, but then the ability to unlock the belt. Riverina looks like a fairly stock standard ramp up. So we cut the portal May last year. The development dirt kicks in. Development dirt kicks in. So you kind of see sort of 1,000 to 2,000 ounces, and then stoping kicks in April. And then importantly, it ramps up to steady state. So we saw June hit the steady state number for FY25. You're always a little bit nervous in ramp ups. The team's delivered this really well. And what does it look like? It's a pretty stock standard, narrow vein, Archean gold mine, really high grade. In the middle there, ounce to 200 dirt, it pinches and swells, but really, really continuous ore body, phenomenally predictable. And so far, when you don't kind of believe ore bodies till they go through the mill, so far it's been excellent. We've got that 12% positive recon, which is really exciting. So when you look at it from like a more regional play or just an expansive play, so we haven't spent a lot of money on this deposit yet. So we've only drilled 35 kilometres in this deposit to get to nearly a 500,000 ounce resource. So what's exciting is not kind of what we've got there, even though that's awesome. It's what we see could potentially be outside it. So that's only down to 500 metres there. One of our deeper holes, 6 at 17. This hole out here, 4 at 10. That gives us opportunity for a parallel decline and ability to go down. And this gap in here, the last data point there we have is 2 metres at 12, 2.5 metres at 12. So there's no drilling in that. So if we add that on, that adds a couple of years of mine life for zero extra capital cost because it's just coming off this decline. So what have we got this year? So we're getting good cash flows in. We will triple the data points in Riverina that's ever been drilled on that belt. So we've had 1 underground rig for the year. We're going to add a second underground rig and then 2 surface rigs. Because really we want to look at this from 1.5, 2.5 Ks down to 800 metres. Start looking at this from a regional resource perspective. But the early indications of this system, it is very big and we're only just starting to scratch the surface. So super exciting to see what this does in the next year. So moving south, this is the second rig, the second underground rather. So if we're talking about what we've achieved at Riverina, Sand King's about 12 months behind. So we're cutting the portal in September. It'll be a fairly typical ramp up, and then really we want to be steady state this time next year. And that's the fundamental growth path to that 150,000 ounces. It's a slightly different deposit, so it's this one that sits in here. It's a lower grade, but it's bulk. So we see sort of tonnes up grade here, the reserve grade of 3.2 compared to 4.2 up at Riverina. But once again, big system. So this system goes for over 5 kilometres. It's traced north and south longer, but really it's about a big system getting bigger. And this highlights the difference between open pit cutback drilling and then targeting underground. So one of these holes, 14.3 at 8, including 12 at 10, this deeper drilling. This is the change of the way we're approaching the geology of this belt, is really targeting those deeper tapping, higher grade structures. When you look on the long section, you can kind of see the evidence of a similar thing. The mine plan's based on this central BD lode. It's open at depth. We've got stacked high-grade lodes to the south that we've got a drill platform to liberate, and then we're starting to see the emergence of parallel lodes into the north that have good widths and good grade as well. So this 300,000 ounce resource, 55,000 ounce reserve, it's Riverina, 12 months behind. So we'll get in there, we'll get it drilled out, but basically this sets us up really well. And then we've got the capability to further unlock the belt, not just extending Riverina and Sand King. So with those funds, what are we trying to get done on a regional scale? So if we zoom back to Riverina for a big system, this is the mines up here, that long section I showed you before, but it's over 10 kilometres of strike on both sides. It's got lithology that's really conducive to high-grade undergrounds, and it's really, basically untapped from an exploration perspective. And this shows the lithology, but this long section on the next slide, this shows it from what it looks like. And this thesis plays out across the whole belt. So basically, the investment thesis we saw 2 years ago, it hasn't changed. We have these incredible anomalies and high-grade hits on the surface, no following up below 100 metres. And really, that's where the gold comes from. So these deep tapping structures. So it's not what we sort of, it's not what we see there that's so exciting. It's what we expect to see when we start drilling. So you've got the 4 at 10, which you saw in the previous section, but basically these structures have been followed for well over 10 kilometres, north and south. The parallels, same Zuleika shear, that evolution have from Frog's Legs up to Millennium. So, that's a nearly 10 million ounce system. So I'm not saying this is it, but it's got all the hallmarks of being a really big regional system that we're only just starting to unlock. Another one, Marline, just to the southwest, that's an entirely new trend. It's got even better hits that have never been followed up. So if you're an exploration play and you just have a few of these hits, you'd be outrageously excited. This is stuff that's never been followed up. So if you're looking at that 10-kilometre trend, the amount of gold that's sort of been hit or mined out of that top 100 metres is phenomenal. But it's the hits that haven't been followed up, like 6 at 10, a metre at 245, 5 at 30. Like, these are high-grade systems that just keep going down, and they just have not had any follow-up drilling ever. So we want to start tasting this area as well, because really as we move into that next phase, going from sort of the 100 to 150,000 ounces, it's that cash flow that we can start really liberating belts, and you can start having sustained and concentrated exploration efforts. So that's really super exciting for us going forward. Sustainability, that's just embedded in every part of the business now, so it's not an optional extra. It means a lot, but basically in its simplest form, look after your people, look after your stakeholders, look after your shareholders, have a continuous improvement, and more importantly these days, just listen to what people want and adapt the business practices to suit. And what it looks like visually is, rehab your waste dumps as you're done with them. Looks really good, but it's all those little things that really make a difference to the culture of the workplace. And that's something that's really shifting the needle at Ora Banda, and probably what I'm most excited about is that the team capability is accelerating hugely, but the team motivation is as well. So over this next couple of years, I think that'll get better and better, and that'll drive really good results. So really, that's kind of Ora Banda in a nutshell. The investment thesis is really simple. So it's that shift in strategy from open pit to undergrounds. The exploration play is incredible. We'll finally be in a position where the cash flows, are such that we can, have a concentrated effort to liberate these belts. So the value proposition, we've been delivering along the way. To me, the best is still in front of us, and that's what I talk about. We get to 150 is the start, not the end. The integrity for us is big, so the investment thesis hasn't changed. We're just delivering, and it was really exciting to bring out that 2-year production profile, because that's what we want to be measured against. That's what we think we can do. That's what we think we're going to deliver, and that's what we want our shareholders and stakeholders to measure us against as that performance. FY25 guidance, nearly 50% last year jump. It's another 50%. So it's really that underground shift. So if you talk about the big change that's coming is the steady state of Riverina, that's going to be really good. The process plant, we've got some money in there to upgrade that and continue that, but we've got an outstanding team there doing a great job. And that 25 million, like I said, the first 25 million we've spent in the last 24 months, we've found 2 undergrounds. This year we've got another 25 million in the year, and then FY25 we're talking 30 to 60 on growth, half of that to go to exploration. So not only are those in-mine extensions, which are really prospective, but those regional scale things, and there's a lot of others that we haven't even gone through, but this belt can deliver. So all in all, we're in a really, really exciting time. We've done a hell of a lot of work fixing. We're now into sort of the front foot growth value creation stage. And I think this year, if we pull off what we think we're going to do this year, I think next year's going to be even more exciting with what we see going forward.